Hello, and a warm welcome to Market Views, a show where we deep dive into the topical issues revolving around our local capital markets. Um, and today, we've two counters that we want to delve into. That's the half-year financials released for National and Holdings, as well as Pro Plastics. But perhaps before we deep dive into it, we can just discuss about the performance of the Zimbabwe Stock Exchange post-SIG devaluation. And today, joining me on the set is Mo Maguju, a financial analyst from FundMe Capital. Welcome to the show, Mo.
Thank you so much, Taimo. I'm super excited to be here today.
Well, interesting. Well, so I'm sure you've seen, I think it's close to a month now since the RBZ devalued ZIG by 43%. And it's unusual for the Zimbabwe Stock Exchange. I think it just gained by 13% from 27 September to date. And I'm sure some of our prospective investors just want to know the state of the Zimbabwe Stock Exchange, most counters listed on the Zimbabwe Stock Exchange. So perhaps can you just share with our investors your thoughts with regard to the performance of the bourse and perhaps what we envision towards the remaining quarter of the year?
Okay, thank you so much for that. So I think, when the central bank or when the government through the central bank devalued the Zimbabwean dollar, now we call it ZIG,
Sure.
there were mixed reactions among investors, both retail and institutional investors,
Yeah.
as to which direction was the Zimbabwe Stock Exchange going to take. And obviously, some were mostly concerned with the value of the investments. Some had questions as to what was going to happen afterwards. But I tell you, as with all markets or as with economies, we do really go through some tough times. But I think it's not any issue of panicking, right?
Yep.
Because obviously, when something of that sort happens, you really need to now, strengthening your strategies, knowing how to play your cards well, so that at the end of the day, you benefit from, any movement that will happen within the capital markets. And in this particular, we're talking of the Zimbabwe Stock Exchange.
Sure.
So yeah, so that's what I think. Investors don't need to panic. They need to stand still. They need to be patient, and I hope that the market will come around. And obviously, we've seen some improvements when the ZIG, has been in stable shape. But obviously, because of the now ongoing economic deterioration, you can see that it's a phase, obviously, that is going to come to an end.
Well, that's interesting. Currently, perhaps if a prospective investor is to ask, do you think most counters, maybe we can just say blue chip counters, are they reflecting their fundamental value, or are they undervalued? Are they overvalued in your own view?
Okay, so with any economy like ours and our own capital markets, I think it's safe to say that most counters are undervalued. They are not reflecting their fundamentals. A lot of companies that we look into, they've got huge potential, for growth. But if you want to look at them using today's lenses, you may make wrong decisions or you can come to wrong conclusions. But like I said, it's all about time and patience. Obviously, if you have got a sound investment strategy, you don't need to worry. Like when others are being fearful, you need to show your courage and be able to weather through the storms. And this also applies in the capital markets.
Yeah, interesting. Yeah, that's an interesting perspective because I've also realized that most investors they tend to have a head mentality bias, eh? So that when most people are selling, they then sell, and when most people are buying, they then buy. without necessarily adhering to their initial policy statement. So that's interesting. Well, so Pev, I think let's now dive deep into the half-year financials released by ProPlastics, and it's interesting. Maybe just another interesting point that since devaluation to date, ProPlastics it's the third largest loser on the Zimbabwe Stock Exchange in terms of its share price, right? And for the half year ending 30 June 2024, we saw revenue actually taking a deep dive there by 18% due to a decrease in the volume of their products, and mainly because of government and other related agencies having placed a hold in some of their projects that have got to do with their projects. So can you possibly just shed more light towards whether we can say ProPlastics as an entity, or whether the performance of the top line? Just share your view on that.
Okay, thank you so much for that. So, is with ProPlastics, what I discovered or what I noticed is that their products, they are demand elastic. I borrowed that term from my economics. Okay,
okay,
I'm not really a good in economics, but I think the viewers can learn one or two, three things from that. So when I say their products are demand elastic, it means that any changes in consumer spending will affect the demand for their products, right? Yeah. So and of late, I think the main reason for the plummeting demand for their products was particularly because the government wasn't doing much activity. There was low uptake from government and non-governmental agencies, but now we are starting to see that the government is actually, taking or embarking in doing some projects, including like bore drilling, and some non-governmental agencies have also embarked on setting up community-based irrigation schemes, just to help communities survive the effects of the El Nino. And also we are looking at the agricultural season, and it's actually upon us. And we also anticipate that that is going to boost the demand for ProPlastics as an entity. And obviously we are seeing some activity in the civil construction industry, that is actually booming, and the activities are increasing, and that is also good for them, because it brings them business. And I also noted that ProPlastics has got also regional operations.
Oh, interesting.
Yes, so we anticipate that the firm is going to get more contracts or secure more contracts that are going to actually boost their top line, right, and drive business growth over the longer term. But I think I have to really say that I'm not really convinced that it is going to surpass their 2023 annual results. Sure. In terms of revenue, because in 2023 their revenue grew by 22%. Sure. As a result of a 22% increase in volume, right? Yeah. So I'm actually pessimistic on that, because I'm not really sure. Yes, I'm confident that they are going to recover from this slight
economic
headwind, but I'm not sure if they are going to surpass their 2023 results.
Yeah, interesting, and I do concur with you there, especially the point that you raised about them possibly diversifying outside Zimbabwe, especially taking into account that for the half-year period, I think exports from outside, it was only 1%. Hey? So yeah, I do concur with you. So maybe just rounding up on ProPlastics, we also saw that the bottom line fell, which resulted in the earnings per share actually declining by over 100%, because it's recorded negative earnings, right? And I think also this is one of the other reasons why like I said, the share price, the counter became the third largest loser over the period from since this devaluation to date. So just looking forward, looking at Proplastics as an entity and its share price listed on the Zimbabwe Stock Exchange, are we likely to see it, improving or whatever? Because also in my view, I just saw that Proplastics is one of the most volatile counters on the Zimbabwe Stock Exchange because it's got a beta of around 1.5. So yeah, opportunities to pop up, just in case, like what you've said. Let's say there is a change of events, those retail investors, they still have got a chance to realize quite significant gains from the counter. But in your view, like let's say maybe 6-12 months from now, do you think the share price is likely to improve or what?
Yeah, so thank you for that, Kuda. So I think, like I said before, that the company is likely to recover, right?
Interesting.
But now I think to get a full view of its performance, I think we need to look at their annual 2023 annual results.
Sure.
And then we cascade down to look at their half-year financial results. So like I said before, that in 2022, the company recorded revenues, or in fact grew their revenues by 22% as a result of a 22% increase in sales volumes, right?
Sure.
And we also see that the company achieved a CAGR of 24% over the 4-year period from 2020 to 2023. And then their export sales contribution was just 11%. And I really liked that. But how things are in Zimbabwe, we have got the RBZ 25% export retention. I don't know about that, but I think the RBZ needs to do something about that. True. Because it actually discourages expansion in regional countries. Sure. So, and obviously we look at the return on equity, which was oscillating between 4 to 6%, which is, in my view, very bad for the retail investor. And I'm hopeful that the company is going to address that. And the total asset ratio of the company was around 1 times, and the return on assets was around 2%. So you can actually see that there are really some structural operational issues that need to be addressed, in as much as the economy is very bad, in as much as there is a high cost of production. But I think management still has to do a good job to make sure that the company performs well, right? And another thing that I liked about the management of Proplastics is that, number one, they set aside 1.3 million, right, for capex. That's for growth and maintenance capital expenditure. And that is really, if you are an investor or a retail investor, if you see a company setting aside some money for capex, it means it is really serious about driving business growth. Yes, it is struggling now because of the economic environment, but I foresee it performing well in the future, provided that the economy stabilizes and the current issues are solved. And the company management also decided not to pay out a dividend. And that was the most sensible and objective decision they had ever made. I was really fascinated by that. Why? Because, if they were to pay a dividend, it would appear that they are not serious about, preserving the capital of the investor. But now, those profits that were supposed to be paid out, in fact, it made a loss, so there were no grounds for it to pay out dividends. But it actually shows that whatever profit that they are going to get, or whatever cash that they had, was being plowed back into the business to make sure that the company survives the current economic environment, which in my view is very noble. And like I said, the company is undervalued, and its fundamentals, are not reflective of what we are seeing in the market,
share price,
the share price. Obviously, there are a lot of distortions, when we look at the share price, and a lot of factors drive the share price. Some may not be even hinged on fundamentals. Yeah, so that's what I think about ProPlastics.
Well, interesting. Well, maybe now, on a lighter note, let's move to Mashonaland Holdings, which actually was, I think, in juxtaposed to that, it actually recorded a 15% surge in the top line, right? To 3.6 million, heavily skewed on rental income, as well as the completion of that Garden View project housing. So yeah, maybe let's talk about Mashonaland Holdings, the business model of it. How does it generate money? What's your overall assessment on the performance of the counter, especially taking into account also what I've said, since the devaluation to date, it's the second largest gainer counter on the Zimbabwe Stock Exchange.
Okay, thank you for that as well, Kuda. Mashonaland Holdings is a very fascinating company. I think it's one of the companies that I started with. I mean, in terms of looking at their financial results in the property market. So they've got impressive fundamentals, right? But I think we will do justice if we start by looking at the property market, right?
Interesting.
The overall performance of it. So, like, if you look like in the Zimbabwean context, we believe that real estate provide a hedge against inflation.
True.
And that's a principle that we find in many real estate books.
So there's
even
an
in
influx of
politics and all
investors
that.
in
Yeah.
the sector. Yeah.
But it has not been spared from the economic headwinds that are facing businesses in Zimbabwe, right?
Sure.
And obviously, we're talking of rising inflation, currency volatility, lack of, the shortage of foreign currency, and the limited access to formal long-term capital with reasonable rates and flexible terms. And obviously, if you look at it closely, you will see that there is also rising construction costs and heavy tax burdens, which are also making it difficult for Mashonaland Holdings and other property companies to really drive large developmental projects, right, in the occupier market. So a lot of activities are happening in the occupier sub-market, where we are seeing most companies, mostly focusing on rental space, be it office, warehousing, wholesaling, right?
Sure.
And more of land, and also more of land sales. But we are not really seeing large developmental projects, multiple, in this country, considering the fact that Zimbabwe lags behind in terms of infrastructure development, modern infrastructure development. So most developers now, they are prioritizing low to medium scale projects, which offer superior returns in the short term, right? So you can see that even in the occupier sub-market, most tenants prefer, office space outside of the CBD.
Sure.
Right?
Suburban places.
And also a strategically located warehousing and wholesaling space as well, right? So I think that's the general overview of the property market at the moment.
All right. Oh,
Yeah.
interesting. And obviously, let's possibly round out on that one. We saw actually the bottom line surging by 72% and the earnings per share by 75%. That's creating value for the shareholders right there. Well, your overall commentary on the performance for the group.
Okay, so I think let's also look back a bit, like
Sure.
in their 2023 annual results, because I'm a numbers guy. I love numbers.
Interesting. Yeah, sure.
So in 2023, we saw that rental income drove the group's total revenue significantly, right?
Sure.
So the rental income contributed about 87% of the group's total revenue. And of that 87%, 74% of it was in hard currency, that's foreign currency. You can see how impressive their business model is. And the rental collections rate stood at 94% in this tough economic environment.
Wow.
So and that is also aided by high portfolio occupancy levels. Like in 2021, the occupancy level was at 81%, 87% in 2022. In 2023 was at 89%. Imagine in this economy where small businesses are closing down, disposable incomes have fallen, but still the business is soldiering in. Yeah, it's withstanding the economic pressures. I mean, that's really impressive. Then if we look at their recent half year financial statements, obviously we see rental income still driving revenue growth. It contributed about 74% in June 2023 and 75% in June 2024. The net operating income as a percentage of revenue stood at 64% over the same period and 78%. So you can see there that as a result of the decline, you can see that operating expenses have actually declined, and that is particularly maybe because they finished completion of the Marshview Class Housing Project and the 12-van day hospital project. So I think with that, the company is likely to, we are likely to see the company, improving its profitability, improving its performance in the next 6 to 12 months. And also the operating profit, it grew by 12% from 36% in June 2023 to 48%. And there's also some particular decisions that I liked about Mashonaland Holdings. If you look at their dividend payout ratio, right, you see that it dropped by 4% from 12% in June 2023 to 7% in June 2024. So what that essentially entails is that entails high profit retention rates. And if they are retaining more profit, obviously they are going to plow it back into the business, therefore driving, business growth over the longer term. And that also means that over the long term, investors can actually benefit from holding the Mashonaland Holdings stock, right? And we can also see the debt ratio there standing at 4%.
Yeah, very low.
And that shows that the company is internally funding its operations.
Sure.
And like I said before, that's because they are limited. There's limited access to formal capital sources with flexible rates and flexible terms. So the company is playing it safe. And you can see the rising inflation, the tough economic environment. The last thing a company like Mashonaland Holdings would want is a large debt balance on its books. It's not good. True. So they are navigating the situation cautiously, making sure that they continue to create value. But though one of also the prospects that investors can look at or can find, confidence in investing in the company is when we consider there's this Pomona Commercial Center Development Project that's going on at the moment. And by the way, the company has already started receiving rental income from their 12 day hospital project already.
Sure.
So it's adding also to the firm's revenue growth as well. And if we look at that Pomona project there, it's underway at the moment.
Yeah, nearing completion, right?
Yes, nearing completion. And they are saying it has got about 14,000 square meters of lettable space, right? That is intended for warehousing and wholesaling, right? So we are looking at, and they've already secured a major tenant there, or they've signed most of the lease agreements with a major tenant. So that shows that the company's got great, it is likely to grow much faster in the future. And obviously, the Zimbabwean market, we are hungry. We have got the appetite for large developmental projects. And I think that if the economy stabilizes, if the government lessens the tax burden, if they set their policies and priorities right, companies like Mashonaland Holdings are going to explode with exponential growth, right? Because in Zimbabwe, we really lag behind in terms of infrastructure projects compared to neighboring South Africa and other countries in the region. So obviously, the stock is largely undervalued, and the fundamentals, like I said, are not reflective of the true, value of this business. So I think it presents the opportunity for investors to profit from the stock over the long term. But obviously, like I said, investors need to come up with sound strategies, sound policies, so that they don't make wrong turns, wrong decisions. Yeah, provided that the economic environment might take a while to stabilize.
Wow, there you have it. Interesting, and so many topical issues to discuss right there. Because we have seen many counters on the Zimbabwe Stock Exchange and Victoria Falls Stock Exchange publishing their either half-year or full-year financials. So if you have got some interesting counters that you'd like us to look at, feel free to drop those counters in the comment section below. If you've got any other contributions, views that you think you can share with us, yeah, you might as well drop in a comment. Yeah, well, so feel free, and don't forget to like, subscribe, and share. Let's have these topical issues around the corridor, so that we just talk about these topical issues revolving around our local capital markets. Well, at this point, thank you, Givmo, for being with me today on the set, and I'm looking forward to have you a couple of times.
Thank you so much for the opportunity. I really appreciate it.
Okay, welcome. Well, for now, we say bye-bye.